The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 1st turnaround Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in right now, 877-927-6648. If you can't dial in, well, please let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific and turnaround Thursday as of 1:08 in the afternoon. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 149 points, trading at 26,298. S&P's up 11. NASDAQ 100 up 17. Yeah, Russell is up 7 points. Actually, leading. The Dow is leading the charge percentage-wise. Just behind that drafting is the Russell 2000. Semis are up 4 points, so 0.25% to the upside out there. Spot volatility index off a $1.04, down 7.5%. You want to watch that throughout the day. And really the close, because should this close down by more than a minus 10%, minus 10% or lower, got to really figure out how you actually say that. Because if I say more than a minus 10%, wouldn't that be above the minus 10% out there? But you know what I mean. Jelly Bean out here, she'll take a look at that. Why do we look at that? Because if you get that, what it would do is signal an initiation move to the upside out there. Gold is up $2. Not getting a lot of traction out here. Silver's down 11 pennies, trading out at 17.12. So we'll certainly peek in on those. Leading the charge here to the upside, it is Simpress NV of $24 or 19%. ABIOMED, I don't know how you really pronounce it, but ABMD is the ticker symbol, up 7% or $17. Khaki Cousins International up $12 or 8.5%. Priceline is up 10. Jose Cuervo, it's actually QRVO. They probably have had a little bit of Jose Cuervo. That's up 14% or about $10. To the downside, Chipotle off $14. Regeneron Pharmaceuticals off 13. Amazon down 13. Alibaba down 9. So we do have some things to take a look at. But I want to take a look at what you want to take a look at, and we have no questions. How about that? Let's not make this a slow day out there. Let's fire them up, folks. Let's go take a look at the general markets, try to get a feel for what's going on out here. Is this turnaround Tuesday going to hold? Well, I'll tell you what numbers need to be breached if, in fact, it is. And so if you're a seller of this market, really right about now is when you would go ahead and fire away. And I base that based upon where the Dow Equity Futures contract is trading right now. Its resistance zone is 26,289. You're 26,266 out here. It's been just a tad higher, so it's not. So if the sellers are going to rush back in and say, "Hey, not so fast," well, you said turn around Tuesday, so let's turn it around right now. This is when that should occur. Will it? I don't know. But that's the level that if, in fact, you see the Dow Equity Futures contract cruise above, close above, stay above, then yes, this was turnaround Tuesday, and yes, the equity futures contracts, the stock indices will go back to new all-time highs. We know that. You know that out here. This bull market is not over. And we also know that this market is trying to form a bottom. But in order to do that, it has to prove itself. Inside of the ES, meaning the NQ has given the signals that it wants to prove itself. It's just waiting. It says, I cannot be the only horse in this game. It can be, but it says, I don't want to be the only horse. And it's looking for some friends out there. Those friends come from the Dow, so it's 26,289, and from the ES Mini, 2845 out there is the number. You see price get above that, and you're still short the market. I just have one thing to say. Don't be short the market, because the price of these equities, of these indices, they're going to go back to their all-time highs. Now, you might say, how can you say that, Steve-O? Well, here's what we know. And I love Tom O'Brien for this expression. If you can't bust them down, what's price going to do? It's going to go bust them up. So if you're a believer in that, and I know that each of you are, because you're as attracted to that phrase as I am, and what we know is sellers were not able to bust it down. All that's taken place in the last couple of days is prices come back to a level of support. And that level of support is across the board. It's in the ES Mini. It's in the NQ. It's in the Dow. We'll take a look at the TAS profiles out here. The exact number, and I don't know how this happens. I don't understand all the math here. I don't want to have to spend time understanding all the math. I just know that it works, right? It's just like electricity. Well, if we take a look at the electricity of the TAS market profiles, its level of support was 2809. You've known that for a few days, haven't you? What was the low today? 2809. Yeah, support was tested. You can't bust them down. It's going to go bust them up. So where is bust them up inside the ES Mini? Well, the bust them up in the resistance zone is going to be 2861. I gave you another level that it needs to cross, and if it gets above that, you can anticipate that that's where price is going to go. Now, that could be a place where you'd go ahead and put on a short. I can see that. It's a bearish structured box out there. But, boy, you better get some good indications from the NQ, because the NQ is just looking for some friends. To say, come on, tag along with me as I take you back up to the highs. The Dow Equity Futures contract, the structure of that box is bullish. The bottom of its support level, in its strong support, is 25,956. Now, price got below that, not by much, 25,922 out there. Really just a smidgen, and that was rejected. You can't bust them down. What are you going to do? You're going to go bust them to the upside. And inside the Dow Equity Futures contract, that is 26,522. Even inside the Russell, its level of support was 1575. You're trading at 1581. There is a mutual message here on Turnaround Thursday. Sellers, either because of rotation or whatever went on, could not bust things to the downside. I don't want to repeat myself, but it is so clear and so evident that we then know what the next outcome is. And that next outcome is it's going to go try to bust it to the upside. I don't know if it will break through. That's 2861 in the ES. That is 26,522 in the Dow Equity Futures contract, and 1614 inside the Russell. Steve Rhodes with TFNN.com. We'll be back in just a few. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, still no fingers doing the walking out there. What's going on? If we take a look at what went on inside the equity futures contracts this morning, I posted inside the den for the day traders out there, was that inside the 120-minute chart, we had the ES Mini making its way down to a seventh wave move out there. Now, what I didn't get a chance to post was the fact that it was also moving down with less relative energy. That's the black diagonal line on my screen, and that was a hammer candle that formed right at 10 o'clock. And so that was a signal, okay, we're ready to try to go bust it to the upside. Still hasn't proven itself. It's got to clear that one level. I don't remember the number that I gave you first. And it clears that, then you're back up to the top of that TAS market profile. But all three of the equity futures contracts on that time frame were doing the same thing. Now, not all were in seventh wave moves, but each of them were pushing lower with less relative energy right into those levels of support. And that's really what you like to see take place, because it tells you those levels of support should hold. They did hold. Here it is inside of the Dow. Now, subscribers to Mastering Probability, we reviewed this pattern last night. It works so well. You just need to know how to use it. And if you didn't attend the workshop and you'd like to, you can still sign up for Mastering Probability. They will give you access to that workshop and two other ones that we added to subscribers' members pages out there. So, you know, it's these markets, the role of you and I are just simply to have a set of tools that helps us to identify the emotion of the market and what's about to take place next, and then decide to take some type of action out there. And if you knew about the bottoms of those boxes in the ES and the YM, and you saw their price was moving, was getting stretched, what would you do? You would tighten up that stop, and you would tighten it in a big way, because you know when you can't bust them down, the next thing is to try to bust them to the upside. Now, we had a request with regard to, hey, where are bonds headed to out here? If we take a look at the bond chart out here, you can see really a widest ranging bar as we speak right now, right? So this is the widest ranging bar. Now, don't know what it's going to be like at the end of the day out here. But here is the A to B equals CD pattern that, in essence, is in play. I'll put up my other chart out here, but I'm just going to take a look at, here's the A to B equals CD pattern that is in play right now. And we're just about, or we have hit the 1-to-1 level. So this suggests here that price makes its way down into the 145-ish area. The only thing that possibly could thwart or stop that move. And you're going to see just slightly different numbers here when we take a look at this chart pattern. The only thing that can thwart that is the mere fact that now in essence, today we're completing the A to B equals CD, the potential A to B equals CD, at least the price projection. All right, so it's made the price projection, wide-ranging bar. We continue to be in leg number 7. That is the letter G on my charts. We know that the previous high that was made with a 7th move. We then know that there was a low made with a 7th move, and now we're back into a 7th move out here. So how do we play that? At this stage, you have to, there's only one way to play this, you have to remain short, or you should remain short. And you have to remain short until price closes, until you get a bullish reversal signal, or until price closes over Stevie's red line. We're nowhere near that. Coming into this level with the widest ranging bar says you head down to the next level. Now, we use these as price targets. That's right. We use these as price targets out there, and we watch for those signals being some type of reversal candle. So that's where I think that the Treasury bonds, T-bonds, are headed to. So what do we do next? Well, let's go take a look at gold. Let's go take a look at the market. Let's go back to the market out here. What else has to happen in order for turnaround Thursday to continue moving higher? Well, the spot volatility index needs to continue moving lower. Remember, right now you're at 1254. At 1254, you're at about an 8% click to the downside. If this continues to move lower, which it should, and the reason that it should, if we take a look at this, is because it's all concocted. It's out of whack. It needs a chiropractic adjustment. And we say that because right now, well, it's kind of getting in line right now. The spot volatility index has been above the February, the March, the April, the May contract. It's now just getting back in line, meaning down below those levels. You're at 1254. 1255 is right now what the February futures contract is going at. 1305. With regard to March, 1366 with regard to April, 1418. That's kind of the normal alignment here. So the spot volatility index is getting back in shape. Getting back in shape or back in condition says that it's going to go target that upper Bollinger Band of 1185. Well, if it hits 1185, and if in fact that's what it does, that'll be enough to get a one-day rate of change as minus 10% or even less out there. And then that sets off that initiation move, initiation to higher prices out here. So you'll want to watch the spot volatility index because if it continues to move lower, prices should continue, certainly in the S&P 500, should continue to move higher. Why else would the S&P 500 move higher? You can't bust them down. If we take a look at market breadth as we speak right now, you have 137 issues above the box, 145 below. It's just a slight little crossover. This is like kissing cousins. It's not going to end well. No one likes to kiss their cousin out here, if you know what I mean. We use that as a metaphor, clearly. And if the S&P continues to move higher, we should see the slight crossover reverse. And in the NQ, it's in a bullish condition as we speak right now. Remember, this is an end-of-day figure. In the time period that I went from my one screen to over here, it had changed just slightly. And I've been watching that all day. So those are the factors to take into consideration out here. What else? 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 Here's the chart that says it all. It says, why is the market trying to form a bottom? This is where you don't get freaked out, faked out, and so forth. And this is where the spot volatility index was so out of whack with regard to its forward futures contracts. And each of those examples are highlighted on my chart here with green arrows. And you tell me whether or not each of those occurrences created a bottom inside of the S&P 500. These are the things to consider out here. You're not going to see this stuff anywhere else other than here at TFNN. But this is you and I just simply playing our role here, which is step by step going and looking at the way the market trades and when those signals come in and what it is that they mean. Now, Now we can go shift over to gold, because what does it mean? You've got the U.S. dollar index, in essence, getting croaked. It's at 88.64. Let's go take a look at the U.S. dollar index out here. Just curious if we are at a new low. We are not. It still has wave number 7 that is in place out here. That was from about 2, 4, 6 trading sessions ago. But if it takes that out, that's going to be something to think about. It continues to get deflected by Stevie's red line out here. So at a minimum for the U.S. dollar index, that's short-term bearish. But we don't know if it's trying to form a bottom. We just don't know. Just like T-bond futures are in wave number 7. Wave number 7 is formed, and it is held as we speak. Well, you say to me, well, Steve-O, come on. U.S. dollar index is getting smoked, so to speak. And gold is up $3. What say you? I say, make a call to those people trading gold in euros. Ask them what they're doing right now. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 130. Yeah, gold's biggest problem is not U.S. Buyers of gold. Gold's biggest problem is the Europeans, those who trade gold based in euro denomination. Because if we go take a look at that, here is the chart of gold priced in euros. That is the bottom panel of our screen. And unlike gold priced in dollars, which did break out, made 100% move by getting back into the September highs out here, you did not get that same breakout pattern in euros. Because of what's going on inside of the euro, the strong euro, the weaker dollar, what traders of gold and euros are doing is they're shorting it. So you may be buying, if you're wondering who's selling, it is gold denominated in euros. Which of the two markets is larger? I don't know. I just know that they have a London price fix. Of course, that would be in pounds in essence. But I look, the reality is, they're both large markets out here. And so if you're wondering why is gold not moving, why is it not getting a bid, so to speak, it's because you've got folks that are trading this in euros on the other side of that trade. Now, the issue is, and by the way, the way that gold really breaks out and moves is when it moves higher in both currencies, right? I mean, that's where gold really gets its get up and go out here. And so that doesn't change my longer-term bullish outlook. It's just answering the question, with the U.S. dollar index getting whacked, why isn't gold doing much out here? So the thing to be watching right now is whether or not we see gold priced in euros get down below the closing low. And that price, let me turn on a data box out here to be a little bit easier. That was from January 30th, so a couple of days ago, and that was at 1076.80 out there. You're at 1079.50. Because if price gets below that, so in other words, it breaks another little swing point out here, it's not good. It's just simply not good out there. And the question is, can we go take a look at the euro for a possible top? Well, we can take a look at the euro. I think if I go out to this chart so that I don't have a delay, well, that's not going to give it to me. Let's just go back and take a look at this chart right here, where I do have just a tad of a delay, which is about a 15-minute delay. When we take a look at the euro, it's strong. I mean, it's just simply strong out here. If we're looking for resistance, let me go back and see what the question was. A possible top. The problem here, if we put this on a little longer-term time frame, is that there's a clear A to B equals CD pattern. So if you're asking where is the top in the euro, it's at this level here, 132.775, somewhere right around there. And really, it's a confirmed A to B equals CD. The reason why we say it's confirmed, or the reason why Steve-O says it's confirmed, is because the B point was passed with a wide-ranging bar. We don't have any type of volume scenarios out here. So what we do is we have to be good judges of what do these bars look like and mean. This is a weekly chart, by the way. If you take a look at last week, 2 weeks before that, nice wide-ranging bar. Last week, probably, other than 2 weeks before that, two of the four widest ranging bars ever since this came off of that dollar-ish level out here. So if you're wondering where is the euro headed to, this is over the intermediate term time frame. And Ruby, if you're looking for a top out here, that top doesn't take place for a while. Again, what we're looking at is we're looking at kind of an immediate term time frame. Now, price could find resistance at about the 126 level. That's a 0.618 area. This should be, in essence, the way that you can use these Fibonacci numbers is not like it's automatic and price is going to turn there. Price will stop there. It is no different than hopping on board an elevator and somebody get it off of the floor. The floors inside of the stock chart are 0.382, 0.618, 0.786. More likely, that is where the euro has the potential to form a Gartley sell pattern on the intermediate term time, because we're taking a look at the weekly chart out there. So if you are trading gold in euros, you are a seller right now. You are looking at this chart, you're drawing the same conclusion, and you're saying that gold priced in euros is going to get lower and lower. You're not going to be a buyer of gold in euros. And there really does lie the problem. It's a problem that I have to grapple with, The way that I grapple with it is say, well, okay, what else can I rely upon before we would have to make that decision to say, you know what, this is going to be a deeper retracement than we thought. And where that comes from is taking a look at the bottom of its TAS market profile from a daily basis. That's 133.30. Could be 13.26. That would kind of be like the final line of demarcation, unless there's some pattern that were to form out there that would tell us otherwise. But right now, it says, okay, you know, what we've got inside of gold is a sideways-ish movement. You've got U.S. buyers kind of piling up, and you have euro sellers piling down. And maybe that just keeps things in check out here. And that's the benefit of being able to have multiple tools that are reliable tools to help assist us with who's winning the battle out here. And if gold closes below 1333.30, it's very clear that it is not the U.S. buyers that are winning the battle. It would then be the European sellers that have won the battle. And if we do see that euro continue to break out, boy, it could be really hard for Goldilocks. Now, the interesting thing here is that the usual tell, the usual advancing leading indicator here is going to be the mining equities. The mining equities, they know this game. They are the ones that say, hey, I've been down this road before, right? And inside the mining equities, shoot, they needed to break above 25.65 in order to kind of get their act together. Haven't done that. This is a weekly chart out here. See if there's anything else on the daily time frame. And there's nothing. Right now it's okay, but we've got to watch the mining equities because, in a sense, they could be the tell out here. Now, silver has been acting poorly. It's down 14. No, what is it down right now? Oh, it's only down 7 cents. It was down a little bit more earlier. But let's go take a look and see where are those profile levels inside of silver. When we take a look at silver, what we're going to do is we're going to come up with a price point on a daily basis. As soon as we get this drum roll, please, Johnny. If we take a look at the daily chart, go ahead, populate. What are you doing? There we go. So here in the case of silver, now this is kind of cool. So here's what we know about silver. Daily chart. This price is trading or has traded right into resistance. That was at 17.32. That was the top of its daily profile out here. Hit that, opened up there and moved a tad higher. Since then has sold off. You know, this tells us that sellers are in control out here of this price range, which is 17.32 down to 16.51. We haven't seen 16.51, but that in essence would be your level of support on the daily basis for silver. So that's why in summary, okay, that's why gold really isn't moving much. And yeah, you're cheering for a lower dollar, but you got to remember, what are those people trading gold in euros thinking? Yeah, they're thinking, hey, you're buying, you're doing the wrong thing. Of course, we think if you're selling, you're doing the wrong thing. Steve Rhodes with TFNN. Somebody's going to be right. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a question in the Tiger's Den from Ruby. Let's go ahead and address that and try to answer that question. The question is, Steve, our 10-year is at 275. Will that be a factor for a lower dollar? So what we have to do, Ruby, is say, well, what is it that is what? And you're asking, you know, it's a good question. But let's take a look at really what the U.S. dollar index is first. And we'll answer it two different ways, okay? First, we just have to know that the U.S. dollar index is nothing more than a basket of cross currencies. At the present time, it's been this way for a long time out here, the euro represents 57.6% of the value of the U.S. dollar index. The yen represents 13.6%, the pound 11.9%, the Canadian dollar, the old loonie, 9.1%, the Swedish krona 4.2%, and the Swiss franc 3.6%. It is those currencies that impact the U.S. dollar index, that form the U.S. dollar index. So the question would be, okay, if our 10-year is going to go higher, is that going to impact the yen? Is that going to impact the pound? Is that going to impact the Canadian dollar? Is that going to impact the krona? Is that going to impact the franc out there? And quite frankly, I don't know the answer. What I do know is that if you go take a look at these currencies out here, that's where you're going to understand what's going to impact the U.S. dollar. So what we did was we looked at the euro. All right, we looked at the pattern that is in play right now. There's nothing yet to suggest anything otherwise. And if that's the pattern that is in play out here, this says that the U.S. dollar index, because of the heavy weighting structure inside the euro, will want to continue to move lower out there. If we look at a correlation chart, though, just to further try to answer your question and see if there's an inverse correlation between the U.S. dollar index, that's on the chart that we're looking at on the top of the screen. The bottom portion of the screen takes a look at the 10-year Treasury note rate. When these bars are above zero, it says that they are correlated, meaning they move in the exact same direction. When the bars are below zero, it says they're uncorrelated. They move in the opposite direction. The time frame that you and I are looking at right now is a 10-day correlation, so over the course of the last 2 weeks. So we get kind of a decent average. I can change this to whatever time period we want out here. I could change this. So on a 10-day period out here, what does this tell us? Then a clear signal to me looks like these things move in the same direction, right, over a 10-day period of time. If we take a look at the 5 period, just in a weekly basis, you've got it even kind of solidifies that even more, that they're more correlated, that they move inside of the same direction. That was over 5 days. If I go to, let's call it 20 days, and this tool usually people will use, a 20, but that's, 20 days. That is 4 weeks worth of trading out here. So Ruby, is there a conclusion that we can draw here? Is there a conclusion that I can draw for you just simply by looking at the facts? And that way I'm not giving you my opinion out there. What's influencing the dollar are its basket of currency pairs, more so than whatever the Treasury rate is. The Treasury rate, and people will say it's going to be rates that are going to go ahead and impact the stock market. The rates continue to rise. At some point in time, that may be true. But we have lived through, if we go back and we take a look at the charts out here, you're going to see that rates rising and the stock market rising have been a thing that has gone on for a long period of time out there. They start talking about the inversion, okay? Then we can go back and find where during inversions the market continues to move higher out here. So sometimes it's best just to go ahead and trade the pattern on the instrument itself and not get too hooked up into correlations. I know I'm guilty of that because I spent so much time saying, well, why isn't gold moving? And it's pretty evident, or appears to be pretty evident. We take a look at gold in euro terms out there. So good question. I hope that answers your question, at least the best that I can answer it. Well, we do have a question out here from Phil. So let's go take a look at this. It's been a slow day out here. I'm like, hey, is everybody tired? I'm actually a little tired. But so let me find where's my sheet out here? Where's my sheet? Where did I put that? What I'm looking for is my 3 time frame charts. Gosh, should be like right here. Did I somehow? It's right there in front of me. What the heck am I thinking? It's right there. That is a scotoma. Okay, this was a live example of a scotoma. For those of you that don't know what a scotoma is, you've all had a scotoma at one point in time in your life. Your friend, your spouse, somebody says, hey, would you go get me the salt? You say, where's the salt? It's in the normal place you keep it. You go look there and you say, salt's not here. Maybe it's pepper, whatever it might be. Maybe it's ketchup or barbecue sauce, who knows what, right? It's not there. Sure, it's there. It's right in front of you. You look, it's not there. And then, of course, that person comes over and shows you that it's right in front of you. Well, I was looking for this set of charts, which was right in front of me. A blind spot, a real scotoma. And that was so that Phil and I could go take a look at ticker symbol HAL. I believe that's Halliburton. And Phil went long today. What saith you as to the chance it gets over the prior high from 2017 and gets out of the base with a measured 1-to-1 move above it all? So let's go take a look at what Phil is doing out here. And in our 3 time frame charts, let's get rid of that A to B equals CD in the center chart out here. Here's what we know. Hey, price yesterday came back. It tested the top of its daily box at 53.34. Prices above support. It came back with lighter volume. This had a breakout on January 22nd. It was 17 million shares. This came back with 10 million shares a few days ago. Yesterday was with 8.5 million shares out here. So you've come back into a gap. Gaps are your friends. You can't bust them down. It'll try to go bust them to the upside. Okay, so back to its highs. Yeah, that's a possibility for sure. Now, I'm not being smart, by saying, yeah, that's a possibility. Right now, you'd have to say, okay, the daily chart, that's a good possibility. Well, let's go look at the weekly chart. What has it done on the weekly chart? Well, the swing point was 54 million shares from January 23rd. And what it did last week was it moved up higher with 60 million shares. Well, there's another plus for you. Now, what you want to see, because when you're pushing a swing point with volume, it says you're going to be back up there. What you'd really like to see by the end of the week, Phil, is for price to close above the bottom of that swing point. 54 million again, January 23rd, and 53.92 is the number. That's the low. Because this week you don't have much in the way of, well, it's Wednesday. It's Thursday. I take that back. You don't have the same type of volume you had last week. If it closed below 53.92, it would be, now you've got a rejection of a swing point on lighter volume. Not really the message you want. You want the message that this closes above 53.92. Come tomorrow afternoon. And then that says, okay, yeah, I still may go ahead and test the high out there, which, by the way, is 58.78. Does this tell us whether it's going to go ahead and bust through that area? Those charts don't. Let's look at the monthly chart. The signal on the monthly was from January of 2017. There were 181 million shares. You pushed into it this past month with 207. So the monthly's pushing into it. Now, the monthly rejected that level, closed just underneath it. Doesn't matter. You're pushing into a swing point with volume. About the best case scenario I can give to you is it likely is making a run for the 58.78, 56.91 level. Whether it's going to bust it out or not, that I don't know. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So since we've been on the air, we've seen the equity futures contracts pull back. Here's what we know. Let's go back and take a look at it. Remember when we started, we said, okay, the key here is going to be 26,289 inside of the Dow. That's the level that price needs to take out and close above if this market is going to continue to move higher. That doesn't mean because we pulled back that it's not going to, but it's just really the clearest indication of where the line of demarcation is. It basically what's been a back and forth sideways market. Look, the market is down, what, 1%? The NDX 100 is down 1.3% on a closing basis off the high, so basically nada, nothing, zip. But the real key number, and that's the cool thing about this set of charts that you and I are looking at right now, is we know the absolute key. We know that 26,289 is the key. And it's nice because you don't have to really figure out what the number is inside the ES Mini or the NQ. We just simply know where the snipers are lined up. Because each time, and you can see this, this is 30-minute charts, by the way, that you're looking at. So if you look at the 7:30 time frame on yesterday, you can see how price continued to try to get above that level, couldn't. That's where the sellers were lined up, just like you and I were looking at with regard to gold and euros and gold and dollars out there. You know, it's so helpful to understand where the battles are, where the war lines are at out there. We know that support is held. We know that price wasn't able to bust things to the downside. We also, at this stage here, hasn't busted it to the upside. Watch 26,289 today. If price, or tomorrow, or overnight, if price closes above that, it's back off to the highs. So, folks, yeah, gold up 570 again. We're just in this sideways-ish type move out there. Nothing really else for me to report on for you. So, with that, we're going to say stay tuned, because your favorite polar bear, my favorite polar bear, everybody's favorite polar bear. I wonder if they're going to do polar bear ads in the Super Bowl on Sunday. Those are always the greatest. And I'm sure they are. And it'll be featuring your favorite polar bear, David White. Folks, stay tuned for David. After that, Tom O'Brien, 3 to 5, Andy Heck, 5 to 6. I'll be back with you on Fabulous Fantastic Friday. And then after that, it'll be Aloha. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.